The Fed, at its last FOMC meeting, announced that QT is officially ending in December. So I think another big catalyst will be the launch of the next round of quantitative easing, which I believe is coming. I thought it would have actually happened already, so I'm kind of surprised they were able to make it through the entire year without doing it. But I think 2026 will be the year that they, crank up the presses again, especially if they continue to see weakness in the longer end of the bond market. And then, of course, you do have, some court decisions, on the tariffs, on the firing of Lisa Cook. I think that could have implications for the dollar and for gold.
2026 is approaching with a quiet, heavy pressure beneath the markets. The kind of pressure you only feel right before something big breaks loose. Everywhere you look, signals are flashing: rising yields, shaky bonds, foreign selling of treasuries, and a Federal Reserve that suddenly ended quantitative tightening months earlier than expected. And while most of America is distracted by election cycles, headlines, and market noise, Peter Schiff has been warning that this moment would come. Gold's run in 2025 wasn't just impressive, it was transformational. It broke all-time highs again and again. While tech wobbled, crypto lost conviction, and stocks fought to stay alive, gold became the one asset behaving like it understood the truth. But according to Schiff, that breakout was never the main event. It was only the opening act. Because the metal he believes will rewrite global financial history in 2026 isn't gold at all, it's silver. Silver has waited patiently in gold's shadow, coiling tighter as the world pretended everything was fine. Now, with the Fed stepping away from tightening, with deficits exploding, with the dollar weakening under its own weight, Schiff believes silver is standing at the edge of the most explosive moment in its modern history. If you own even 1 ounce of precious metal, what comes next might define the rest of this decade for you. This isn't hype. This is the setup.
Well, even, characterizing it as a pullback, we're at 3,950 as we're talking. We've only pulled back from a level that we reached for a day, right? We had a quick move up, but the fact that we're just below 4,000 doesn't really feel like it's a pullback. It's only a pullback in relation to the fact that we almost hit 4,400, which was crazy in that it only took us maybe a week to get there from hitting 4,000. So if you throw that week or two out and just look at where we are, we've gone up a lot on the year. And I think sentiment, it's interesting how such a sharp decline can turn the sentiment to get everybody thinking that this is now potentially a bear market already in gold, and that there's a lot of downside risk. I think that's kind of what the market was trying to do in shaking out some of the newer entrants that, may not really have the conviction or maybe came in with some leverage and have been flushed out of the market. But we've created a lot more, nervousness so that we can climb that wall of worry. And so as far as I'm concerned, if this is a correction, it's probably already over. I don't think there's that much downside in the price of gold from here. And the same thing with silver. Silver didn't hold above 50, but it did take out 50, which is something it never did really in 1980 or 2011. We got almost to 55. And now we've had a pullback, but, we're holding 48.50, which if you told people even a few months ago, silver would be at 48.50, they wouldn't be, oh my God, it's pulling back. They'd be very happy that silver was at this price. And especially the gold miners. Gold pulling back to 3,900 is great for all these gold mining companies. They're making a ton of money at $3,900 gold. They're making a lot of money at $2,900 gold. And that never really got factored into the price. I just think we're early in a broader bull market. I think that investors, mainstream Wall Street investors, both institutional and retail, are just finally noticing gold and deciding that they should make it a part of their portfolio. And this is after, gold is up, 11, 12x this century. The Dow is down, close to 70% priced in gold since peaking in 1999. So gold has outperformed the markets, yet investors haven't even noticed that really until just recently. And I don't think that the fact that they've now decided that gold should be included in a portfolio, whereas before it had no place in a portfolio, I don't think that is going to change because, oh my God, now gold's 3,900 and not 4,300. I think you're going to start to see more accumulation of gold from investors who never bought any. And I think the central banks that have been the drivers for the past couple of years, I think they're actually going to pick up the pace of their gold buying. I think more central banks that weren't buying gold are now going to start buying as well. So I think there's a lot of new demand coming from gold, and I don't see a lot of new supply. I mean, there's some, but not nearly enough.
People who come to this event, people who are in gold, they're usually used to being the contrarian. So if they see the mainstream coming in, maybe they feel a little bit uncomfortable. So anything you'd say to those people?
Well, I think it's still contrarian in that now that the mainstream is dipping its toe in the water, it's still, a small percentage of mainstream investors. So I think we've got a ways to go before it's kind of a crowded trade. If you want to see, something that seems crowded or bubblicious, look at what happened in crypto. Look at the enthusiasm. This is, I think, the oldest gold conference. It's been going on for, 50 years, the Orleans conference. And there's more people here than last year, I think. But there's not 1,000 attendees. It's less. I forget, 600, 700. I was at the Bitcoin conference in Las Vegas over the summer. There were 35, 40,000 people who paid to attend. So we're nowhere near there. We don't have that kind of level of interest or enthusiasm. And when I was at that conference, nobody was worried about the Bitcoin price going down. I mean, everybody was 100% convinced it was going to 1 million or higher. But here, you get a lot of people at the gold conference. Well, they're nervous that we could get a pullback, and they're not like crazy enthusiastic that we're going to be at $10,000, $20,000 gold next year. So I think it's still early. The people in Bitcoin they're convinced that they're early. And I was trying to point out, well, you have 35,000 people at a conference. It's not early. I've been going to investment conferences. That's the biggest one I've ever been to. And so that shows you that, a lot of people are already involved. You're not getting in on the ground floor when the conference is that big.
Peter Schiff says the Fed didn't end QT because the U.S. economy is strong. QT ended because the system couldn't take any more pressure. The long end of the Treasury market is weakening. Major buyers are stepping away. Deficits are spiraling at a level that even the IMF openly calls unsustainable. Citi, UBS, HSBC, and JP Morgan have all issued warnings about Treasury market fragility. Even key foreign creditors, China, Japan, and Saudi Arabia, have been quietly reducing their exposure. Gold recognized this first. That's why 2025 became one of the strongest gold years in generations. Central banks bought more gold than at any time since the early 1970s. Sovereign wealth funds rotated out of dollar assets. Hedge funds rebuilt long positions. Retail investors across the U.S. finally started to take the signal seriously. Gold wasn't reacting to a single event. It was reacting to the changing foundation of the global financial system. But Schiff keeps telling investors that silver is the real story. Silver wasn't lagging because it was weak. Silver was lagging because this is how every major metals cycle begins. Gold leads, liquidity expectations shift, institutional portfolios rebalance, and then silver, the thinner, faster, more volatile metal, launches with force. And this time, silver's fundamentals are more powerful than anything in modern history. Industrial demand is hitting record levels. Solar manufacturing, electric vehicles, semiconductors, emerging tech, all consuming more silver every year. Meanwhile, supply is shrinking. Above-ground inventories are tightening. Mine output hasn't grown meaningfully in over a decade. COMEX-registered silver is near decade lows. Global refiners are running hot. Even the U.S. Mint has struggled to keep up with demand. This isn't a stable market, this is a structural shortage. Silver breaking above $50 for the first time ever was the market revealing its hand. Not even 1980 or 2011 managed that. And while the pullback into the upper 40s scared some new investors, Schiff says this is exactly how big breakouts behave. Once a major ceiling cracks, it doesn't return. The psychology of the market changes. The old resistance becomes the bottom of the next leg higher. The missing ingredient now is liquidity, and Schiff believes that arrives in 2026. He argues the Fed will have no choice but to launch a new round of quantitative easing, not out of preference, but out of survival. Outside analysts like Larry Lepard, Lynette Zhang, and Luke Groman agree the U.S. cannot finance its deficits without renewed liquidity. And when liquidity floods the system, silver historically delivers some of the most explosive price action in the entire commodities universe. Smart money sees this. Central banks are loading gold. Hedge funds are positioning in silver. Sovereign funds are rotating into hard assets. Retail buyers are waking up. The mainstream still sleeps, but the foundations are shifting. Gold lit the fuse in 2025. Silver is preparing for ignition in 2026.
Yeah, well, we just got a rate cut by the Fed, and that didn't seem to be the trigger. I think we're going to get another rate cut, despite the fact that Powell kind of said it wasn't a lock. You know, the market's kind of priced it in, and he kind of pushed back against that. But at the end of the day, I think there's going to be another cut because I think the economic data is going to continue to disappoint. Now, we're not getting as much data as normal because of the government shutdown. But it's possible that they end that government shutdown and we get a deluge of bad economic data that could be a catalyst for another move up, in the price of gold as people start to, factor that in. And the Fed, at its last FOMC meeting, announced that QT is officially ending in December. So I think another big catalyst will be the launch of the next round of quantitative easing, which I believe is coming. I thought it would have actually happened already, so I'm kind of surprised they were able to make it through the entire year without doing it. But I think 2026 will be the year that they, crank up the presses again, especially if they continue to see weakness in the long run of the bond market. And then, of course, you do have, some court decisions, on the tariffs, on the firing of Lisa Cook. I think that could have implications for the dollar and for gold.
So do you think quantitative easing starts under Powell, or do we wait until his term is over? We've got this new Fed chair in that's probably going to be more Trump aligned. How are you seeing it?
Yeah, it's hard to say. I forget when does Powell leave? Midway through the year, May? I mean, I guess it's about 50-50 that, they can hold off on QE. It kind of depends on what happens. But I think if you start to see a big move down on the stock market or something that might scare the administration, there'll be a lot more pressure. And we'll see. I mean, today, we're getting a decent decline in stocks. I know Bitcoin, broke below 100,000 for the first time in about 4 months. And, that could be a bit of a leading indicator that, people are starting to take risk off. And it may not just be crypto. It may be a broader based risk off trade, which also could see some money flowing back into gold as a safe haven investment. And I think as the air comes out of the Bitcoin bubble and people begin to question the digital gold narrative, which they should, because it's just a meme, to the extent that people wake up to the reality that Bitcoin isn't digital gold, well, then maybe they'll buy real gold instead. And so there could be a source of some extra gold buying from people who either get out of Bitcoin or instead of buying Bitcoin, decide to buy the real gold, right? Instead of some fake version of it.
When you look at the U.S. economy, how bad are you thinking it could get? What's your vision there?
Well, I mean, I think things are pretty bad. I mean, if you look at the most recent polls on Trump's approval, his approval on the economy is the lowest it's been of either of his presidencies. He only has a 30% approval rating. So that's not even like all the Republicans. And over 60% disapprove of his handling of the economy, right? Just the economy. That's supposed to be his strong suit, right? And, Trump is going around, touting how we have the strongest economy in the history of the country, right? We have the hottest economy in the whole world. And he contrasts that to the Biden economy, which, we had last year. And he said that was the worst economy in the history of America. So apparently, in less than a year, we've gone from the worst economy in the history of America to the greatest economy in the history of America. Yet the voters don't approve of his handling of the economy. So somebody's not, telling the truth, right? Either the public loves the economy, but they're afraid to be honest with the polls, or that's one area where I trust the public. I don't trust their opinion on a lot of things, but I trust them to know how they're doing themselves. Because when they're asked about the economy, they're not talking about the overall unemployment rate or inflation. They're talking about their own individual circumstances, right? And so they're answering that question based on what they're experiencing in their own lives. Are things getting better for them financially? Are things getting worse? So people know, their own circumstances, right? Yeah, well, I think the people at this conference are among the few people that are protecting themselves. They are at a gold conference, right? So everybody at this conference, I'm sure, has some gold, has some silver. They own some mining stocks. So the people here are not the ones that need protection. It's the people who didn't come here, that have no protection. Now, some of them may think they have protection because they bought Bitcoin, but Bitcoin, they're going to find out, is probably riskier than all the stuff they were worried about. They're going to end up losing more money in Bitcoin than if they would have just stayed in the S&P 500. But I think most people, especially retirees or near retirees, need to understand the risk of inflation and the devaluation of the dollar, and they need to do something about it. They should be buying gold and silver. I got Schiff gold, right? They could buy from me. They could buy, someplace else, but people have to own physical gold and silver, and they should have an investment portfolio that reflects the reality of what's going to happen to the dollar over time and the value of U.S. assets. And people need to invest globally. We've been investing for clients in international dividend-paying stocks. If you look at our core dividend payer strategy, year to date, it's up about 50%, which is a phenomenal return. This is probably the best year we've had in the 11 or 12 years that I've run the strategy. It's about triple the S&P. Most years, the S&P has outperformed the strategy, but now this strategy is destroying S&P. And I think this is the beginning of a major rotation out of U.S. stocks back into global stocks. So I don't think what happened with our strategy in 2025 is going to be a one-off year. I think it's the beginning of a trend that's going to last for many, many years. And so people should recognize this change and start moving money out of the U.S. stock market and investing in the markets that we're investing in our global strategies, because the valuations are much better, the dividend yields are much higher, and you get the tailwind of a weakening dollar, which I think is going to strengthen over time. And that's going to be one of the main reasons that foreigners are going to start pulling out of our markets, because they're going to have a headwind. They're going to be losing on the foreign exchange, and that's going to be subtracting from the returns on U.S. assets. So they're going to want to divest. And it's been foreign buyers at the margin that have really helped power the U.S. market for the past 10 years. And now they're going to be selling instead of buying.
If Peter Schiff's outlook is right, and with each passing month more data points seem to align with his warnings, then we are standing on the edge of a generational shift. Gold will continue doing what it always does, protecting wealth, signaling danger, anchoring confidence. But silver? Silver is the flashpoint. Silver is the moment when liquidity meets fear, when policy meets consequence, when the illusion breaks and the real world asserts itself. 2025 wasn't the end of anything. It was the beginning. And 2026 may become the year silver sets the tone for the entire decade ahead. If you want to stay ahead of this shift, not chase it after the crowd wakes up, make sure you subscribe and turn on notifications. This channel is here to prepare you before the biggest moves happen, not after. And now, I want to hear from you. Do you think silver can break every historical ratio and become the strongest performer of 2026? Or is the world still underestimating the one metal with the most to gain? Drop your thoughts below. Your insight might shape our next deep dive.